there are some people who work in financial advising type companies that are incentivized to sell products. And those types of people, if a Bitcoin product is presented, they will be incentivized, they'll be taught and educated on how to sell that product. And from there, they will begin selling it, which that's not an ideal setup, but at least they're equipping people and getting Bitcoin out there in some capacity. There are other people who are like me, where I don't sell products, who genuinely want to educate their clients and do what's best for them. There's no commissions or anything like that involved, and we're willing to go where we think will best serve their financial situation. And then there's another set of financial planners that are typically, unfortunately, they're a lot like their setups like mine. I'm what's called a fee-only independent financial planning firm. And there's a lot of these people who have removed themselves from relationships with like broker dealers and commission-based products to allow themselves to theoretically do simply what's best for their clients. The problem with a lot of these people in firms similar to mine is they're already staunchly set in their convictions. And that's usually a mix of market efficiencies, using only like iShares, maybe DFA or Vanguard funds, basically index only. Any type of active management or anything outside of the box of buying a 60-40 portfolio is day trading essentially. So that group will be the hardest, because again, you have group one who is, they're going to be incentivized to sell something. And then group two, based off your personality, like I'd like to think that I'm willing to have my mind changed. I think I'm right. Everyone thinks they're right until you realize you're wrong. Then your mind changes. Then you think you're right again. So people like me in my type of firm who are willing to have their mind change and hear things, I think we'll be the first to adopt, and at least adopt not from a non-sales perspective. But then again, there's the other people who are not willing to have their mind changed yet. They're the tough nuts to crack. I've tried to have a lot of conversations with those people presenting Bitcoin in different ways. I sat in a webinar yesterday for it was talking about the current state of the Social Security Trust and how its fundedness level, and the ability to continue paying out Social Security here in the States for certain amounts of time, dependent upon what possible changes are made. If it's increasing the Social Security tax rate, if it's raising the ceiling on what's taxed on Social Security, if it's dropping a cost of living adjustment on Social Security, all these factors. Anyways, I was part of this continuing education thing, and it was just online. And there's a chat forum, and these chat forums are usually crickets because no one really wants to be active talking about Social Security Trust Fund. But Social Security really frustrates me. I do believe that Social Security is essentially a forced Ponzi scheme by the U.S. government. Like if we look at the definition and the like how a Ponzi scheme functions, it is identical to what Social Security is. So I get in the chat and people are talking about how maybe we should, if you make too much money, you should no longer be available or eligible for Social Security or whatever. People are saying what they want. And I mentioned that maybe we should all just recognize that Social Security is a forced Ponzi scheme upon the U.S. and on citizens. Maybe we should look at how to start phasing it out. And that ruffled some feathers. But then other people started talking about how can we shore up the trust fund? I mentioned, well, gosh, why don't we just print a whole bunch of money and overfund the trust fund? And that's a good way to secure it. And that comment, a lot of people started commenting back about. Some people are saying, yeah, it's actually, why don't we consider that? Ironically, that question got upvoted for the speaker to address specifically. So that means that people are considering, hey, maybe just printing a bunch of money and using that to shore up the Social Security Trust Fund is a good idea. So yeah, that question, some people thought, yeah, it's a great idea. Other people were commenting back to that saying, well, that could lead to inflation, which I allowed to be a rock in their shoe, and said, okay, well, so are you saying that money printing can lead to inflation. It's not just greedy corporations, and that cause people to go further and further down there. And so, okay, well, maybe do you think hard money would be a solution? Like, oh yeah, well, gold and silver historically have been good solutions to reducing inflation. Then, well, what do you think it'd be possible to find or create a form of money that has a fixed supply? So anyways, these are the people in that webinar yesterday are the type of people who are the second group of mostly like fee only financial planners who are generally trying to do what's best for the clients and be highly educated in all these fields. But again, a lot of them are already like set really staunchly on what they believe and have biases. And those biases usually that Bitcoin's tulips and beanie babies. But I try to be a thorn in their side and urge them to think. We'll see. That was a really long tangent, but that's what gets me going. It's odd. I have the welcomed opportunity to actually present Bitcoin to people all the time. People hire our firm to give them direction with their finances. So we're in a trusted relationship, and those people, it's pretty simple. And then I'm met with my peers is a total opposite. They're really well studied and have convictions of their own that they're nearly immovable on for the most part. So I live in these fields of like, they come to us very malleable. That's why they hired us. And there's no way you're going to get through, but I'm still patiently trying to help them out. It's less for helping other advisors. It's the fact that like, okay, that advisor works with 150 clients. That frustrates me because I know that if he doesn't understand Bitcoin, he's got 150 clients who are sitting in a 60-40 portfolio, and he thinks that their inflation rate that they can assume for their portfolio is going to be 2.8%. Like if you look at the systems and like resources that most financial planners use, like they have these built-in metrics for assumed rates of return, assumed inflation rates over the next 50 years and so on. And I think most Bitcoiners will look at this and be appalled.
What are you actually expecting for like inflation and for that moving forward? Because this is something where it's super hard for me. Even for Bitcoiners, there's this wide spectrum of people saying like the most extreme say like, oh, like the fiat dollar could be erased next Wednesday, and then there are the people that say like, oh, a fiat dollar, like a fiat money will always be around. So you have like on both spectrums, like the one thing everyone agrees on that fiat currency is the US dollar, the euro, yen, whatever you choose, will always go down. Like I think that's the only conception that like most people and especially all Bitcoiners agree on. But then to the degree of like what inflation rate is always hard, and especially when someone puts out price targets on my podcast, I always have that one comment in there saying like, yeah, great that Bitcoin is going to 1 million, but what will 1 million give me? And it's like, yeah, okay, you have to adjust it for inflation. So like the inflation rate is something that I'm like, how the heck should we know? Like, I have no clue of like, how to even approach that, to think about assuming an inflation rate for the next like 2 years, no matter even 50 years.
Yeah, so most financial planning software, so we don't use these because I have strong convictions and opinions otherwise and can do the math pretty quickly in my head anyways, for the outcomes that it would present. But most financial planners use Monte Carlo simulations, which are basically 1,000 randomized scenarios of what will happen with your money over X amount of time. So Monte Carlo typically would have like, all right, Robin, you have you have $2 million in these investment accounts. You're 47 years old. You want to retire when you're 63. We're going and you think you're going to spend $250,000 per year during retirement. Here's your probability of success of hitting that goal, depending on your savings rates and so on. And these Monte Carlos it'll run 1,000 randomized scenarios of different sequence of returns with your investments. So like, all right, you have whatever I said, $2.5 million. So that $2.5 million can have a total annualized average return of 9.6%. But the sequence that happens will massively dictate your end of life value. So it has expected returns, but another piece of Monte Carlos is the annualized inflation rate. And that's a big problem with these things, in my opinion, because most of these Monte Carlos have a default inflation rate, like way lower than I would be comfortable with. Like some of these defaults are like 2.5, 2.8, maybe 3% annualized inflation, which of course, if you're going to listen to Uncle Sam about what inflation is, well, yeah, that makes sense. It's between 2 to 3% annualized for CPI. So we should use that as a as our inflation rate for a personal level. Um, I just don't see that as being sustainable. I haven't seen that inflation rate in my life. Maybe that's because I keep having more kids, so of course our grocery budget's going to go up. I don't think that's it. I think it's actually each avocado costs more than 3% last year. Um, so uh, the what will inflation do? I do think that the default assumptions that most financial planners make is way too generous on our ability to not have high inflation. Um, again, the metric that's used by most planners is going to be CPI, which I would assume as a Bitcoiner, you understand what CPI is made of and how it's manipulated with like, oh, well, we're not going to increase the cost of a car by as much because your car has power windows, so therefore we're going to get a discount on the inflation rate of your vehicle, things like that. That's massively manipulated. um of course, we could look at monetary inflation. Is monetary inflation the true indicator of asset inflation? So if we're looking at the increase of money expansion, is it closer to 8 to 10%? I would lean towards that. I know this. No matter what I say, it's going to be wrong. So this goes back to like more of how we do planning at our firm. Is it's like most financial planners going back to like these scenarios and simulations. Most planners, it's like, all right, you're 43 and you want to retire when you're 63 or whatever I said earlier. What they'll do is they'll sit down, they'll ask you a bunch of questions. How much money do you want to spend on utilities when you're 76 and whatever? They're going to run it through of your assumed rate of return for all these things. They're going to have their default inflation rate and so on. They're going to give you a 3-inch thick booklet that says, hey, if you do X, Y, and Z, and if the market does this and inflation does that, here's your probability of being okay when you retire. You're at a 64% probability of success of retirement. We'll see you next year. I think that's massively broken because you're assuming that you know what all of these things are going to do for the next few decades. And I know that the one thing I know for sure is I have no clue what's going to happen. So that goes back like how I'm going to this because you asked like, what do I assume for inflation? I would say higher than most advisors, but how we work with our clients is way more it sounds like a commercial, I'm sorry, that is way more tactical and small steps in planning. Like we approach it through agility. So when we build financial plans for our clients, they're not a few inches thick, it's 2 pages. It says, here's where you're at right now, here's what you said is important to you, and here's everything we need to start working on. And then we're going to meet on a very regular cadence to regularly tweak and adjust and update what you have. If we need to make any decisions with your taxes, your investments, your retirement, your businesses, or anything like that. And then, oh, hey, based off of what's happening with your cost of living and your assets, here's where we're at right now as far as your financial freedom. So we basically I remove that massive guesswork completely by bringing in regular small touch points. And of course, you could say, well, Jim, I need a number here. Am I going to be okay in 40 years? And that's why I think owning Bitcoin in some capacity makes sense, because that removes that issue. Was it Charlie Munger and Warren Buffett? I think in like 21, even mentioned that they think that the U.S. dollar will no longer be the primary global currency. They didn't give an answer of what they thought it would be. They seem relatively sympathetic to China, so I'm assuming that they think it will be some whatever their currency is in 100 years, or by the end of this century rather. But I think everyone is starting to recognize that the money is broken, but the rate at which it reaches final breakdown is unknown, or if it will. Will goods and services be even priced into the dollar? Will it be priced in Bitcoin? Will it be priced in the dollar, but the dollar is pegged to Bitcoin? Like, I have no clue what's going to happen here, but I know you should probably own some Bitcoin. And if we look at how much, then you have to look at what's the assumed growth of Bitcoin and what's the impact of Bitcoin's appreciation, how will that impact other asset prices? Like if we think that Bitcoin will go up over a long period of time in real returns, not nominally, but in real, then that has to come to the detriment of other assets, be it your money, bonds, stocks, real estate, gold, collectibles, things like that. So if we think that in real terms, the value of your assets will go down in order to drive the value of Bitcoin up, then you have to start considering, if I don't own any Bitcoin and Bitcoin is starting to take a larger and larger piece of that pie, what will actually happen to the real value of my portfolio? And then you need to think about substituting whatever sliver of that with Bitcoin. I would say that's the base case.
And it's super interesting because I get asked the question more and more by friends, which kind of makes me bullish on Bitcoin, but worries me about the financial future of the euro, because more of my normal friends that aren't in Bitcoin asking me now, oh, will the euro go down next year? And it's interesting because they haven't been down the Bitcoin rabbit hole. But they got first down the rabbit hole of like, oh, I think our money is broken. And they're all young. Like, there's all young people that ask me that. And more of them actually get Bitcoin and get hedged now with Bitcoin. And I don't care about that question as much. Obviously, the inflation rate is super interesting because it's something that we all like feel, and things get more expensive, and it's something that even mainstream media talks about, that inflation is too high, which I think is amazing. That mainstream media is now talking that inflation is too high. The numbers they're pulling is completely absurd. Like I think they're all way too low, but at least they're talking that inflation is too high. That's the main message that should come across. And I always tell my friends, and I always tell the people that ask me a question of like inflation rate. At the end of the day, I have Bitcoin and I have faith in Bitcoin. And if the dollar is inflating with 50% next year, I know that most of it or part of that inflation will be captured by Bitcoin, and I will be fine. So yeah, I don't want the dollar to hyperinflate, honestly, because this will make a lot of trouble for normal people. And I don't want trouble. I don't want a civil war or anything like that. I don't know what will happen if one of the chief three nations like Euro, Yen, or dollar is hyperinflating. I just had Parker Lewis on, and he's like, if one of the chief three nations is hyperinflating, it's game over. Like he's the gradually then suddenly guy. But I know I do everything in my power to be okay with Bitcoin and set myself up hopefully for success. And then it's like, yeah, I still care about the question, but maybe not as deeply as someone that still is in the fiat system.
It's interesting with you. So yeah, news agencies and normal people are starting to talk about inflation. Is inflation too high? That even goes back to, are they actually asking the right question? And the question is not, I would argue, should not be what rate should inflation be at, but rather, should we even have inflation? And if we have it, why does it exist? And just pulling on that thread. So I think people are still trying. It's good to see societally people starting to ask better questions, or at least be curious. But I think it still is somewhat misguided. And until you start asking the right questions, it's going to be hard to come to the right conclusion. And I think you're seeing this. Let's see. So you're seeing this in another area of society. So, for instance, like I'm a Christian, and I think a lot of Christians, or a lot of people globally, are waking up to a lot of issues with like morality and social norms over the last few years, and a lot of that, especially a lot of that, has to do with like how boys and men behave. So I feel like there's been this gap of good manliness societally for several decades at this point, and it's been replaced with hyperfeminism and like domineering of women, and the man's role has been uh, manipulated and looked down upon. And people are starting to ask, like, what happened to strong men? And they're asking questions about what manliness looks like, but they're not asking the right questions. So they're asking questions, recognizing their solution, but they're asking the wrong questions. And if you ask the wrong question and thus lead you to the wrong conclusion, you have people like Andrew Tate who come in and start filling that gap. They feel like, oh, well, something's wrong with manliness. That guy is super machismo, so we're going to bring him in as the answer to manliness. And you're getting the wrong conclusion because you're asking the wrong question. And I feel like Andrew Tate is the manliness, quote unquote, equivalent to a substitute for our problems with our current monetary situation.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.